All right, guys, let's get down to it and help you make some money. Today's first stock suggestion, eHouse China Holdings. eHouse is a real complete real estate proxy play for the Chinese real estate market. Now, I know before you get up in arms, it's been a pretty sloppy market. Even the management of this company admits there's been a lot of softness in certain cities and it's going to linger. But here's the thing, it can also create opportunities. There's going to be some pricing discounts. There's probably going to be some relaxed policies. All of that generates activity. This company makes a lot of money from that activity, not just the prices of homes going up or down. In fact, in the second quarter, they had standout segments that included their e-commerce was up 38%. The sales agency service, which is traditional, up only 5%, but still up in a sloppy market. Online real estate up 97%. Real estate information up 52%. By the way, execution, phenomenal. In the last 4 quarters, they beat the street by 83%, 43%, 18%. The last time out, 100%. Revenues were up over 40%. Today, I love the way the stock was acting. I was going to mention this earlier in the show. I waited till today. 3.7 million shares traded hands, more than twice the average daily volume. Closed above a key resistance number. From here, one more hurdle, $12. After that, I think the stock rallies to 16. I know Dani loves this company.
No, Charles, I'm sorry. I don't love it here, and I'll tell you why. You know, the stock is off considerably year to date.
Right.
But that's after all those beats, you know, so you got to think a little something's wrong. So it's the fundamentals in China. First half.
Is this a non-trust of Chinese companies in general, or?
Well, I think there's that layer, right? But I think underneath that is the housing market in China. It's off over 9% in the first half. And the government is trying to juice things up by hanging little carrots and saying, oh, you can't just, you can buy more than one property now. So there is that incentive behind this, but I still think we have a little way to go. I'm not feeling you right.
What about you, Matt?
I'm loving it. I'm loving this stock right here. I got to stick up for my guy. No, I liked it. It's a stock I've owned in the past, and I've actually never made money on it. But, so I figure eventually I got to make some money on this stock. No, you know, home sales have been declining in China every month. They were down about 5% last month, but they've gone from 15 to 10 to 5. So that decline is coming down. This company trades at a PEG ratio below 0.5, very undervalued. A big reason for that is because it's a Chinese stock. So it's going to trade at undervalued. Technically, in my opinion, it already broke out. We're going to have a run to about $15, which is about 35% upside from here. So fundamentally, technically looks good. You know, the problem is just, you know,
because of the volatility, if somebody was in it, where would you suggest to stop loss?
10.25, 10 and a quarter. It's pretty tight, but that's right.
Yeah, I would say $10. And you just simply, you said you don't like it at this price. Would you like to see it start to move higher?
I'd like to see single digits before I get in, because I still think there's a little bit of fluff that has to come out. But overall, you know, this is a company that's actually taking it online, and nobody else is doing that right now. So in an environment where they're trying to juice it and the government's behind it, I think that ultimately it's probably a good.
And Chinese stocks are coming back too. Chinese stocks.
I know. I love the way they're acting here recently.